From Barangaroo Studios, the ausbiz COB is the key stuff you need to know about the day in business and finance.
Welcome.
Hello. This is the COB. I'm Nadine Blaney.
And I'm Juliette Sarli. On a day, Nadine, where we kind of went nowhere. We had a really good spike on the open, but it's always when you see this weakness coming through in those key mining and energy players, of course, concern about not enough stimulus from China. I loved Chris Weston from Pepperstone's note this morning. Chinese authorities, are not going to be bullied into when they release their next stimulus announcement by the market.
This is true. But it has been sort of a confluence of events, I suppose, bringing about this big fizzle on this Wednesday. Commodities, yes, and energy as well deserves a mention. So we've seen energy prices come off, and that has done a bit of damage to...
Sorry, I was like, I'm off screen.
To the market overall. So yeah, that's the story there. And then we get to the RBNZ following suit from the FOMC.
And just actually should speak that India's central bank has held their rates as expected but shifted their stance to neutral. But yeah, double whammy. I think one of the RBNZ board members mentioned double whammy, double happy. But Greg Smith, who I was talking to from Devon Funds, he actually controversially called 75 basis points. He said, look, I never thought they were going to do that. I just thought that they should do that. And he says that the Kiwi economy is cratering and a lot more support is needed.
Shoulda, coulda, woulda, right? There's always a bit of a space between what we think central banks should do and what they actually do. But a pretty aggressive tumbling, cut coming from the RBNZ. All right, let's take a look at some of the sectors and to see how they performed today. Energy, we've got, some big falls coming through here. The likes of Woodside Energy off by 3%, Santos off by 2.5%.
And having a look at the miners, of course, a weakness there too, continuing in on the China theme. Fortescue, though, at one point was down by about 5%, so it hasn't finished too badly. 2.3%, 1884. BHP down almost 2%. $43.20.
It was tech names that led the US market higher, and so a bit of relief here for investors. I've had a number of good conversations over the past couple of days about the likes of Pro Medicus, WiseTech just being so fully valued, but still can make up some further ground on a day like today. WiseTech up by 1.6%, TNE up by 1.3%, but Zip, I almost made that the stock of the day today because it has just been going gangbusters.
Yeah.
And that's on no news, up 6.25%.
I do just want to point out for our newsletter readers, which is everybody listening to this podcast and watching us, Sean Hickman has written a really interesting point on Xero, which was just on your screen as well. So you can find that in our newsletter. If you're not a subscriber, ausbiz.com.au, sign up.
What are you waiting for? Woodside, a bit of news out there as well, apart from the energy prices. It's completed the acquisition of Tellurian and its US Gulf Course LNG opportunity for $900 million. So yeah, big in US LNG now that Woodside is.
Yeah, I think they're calling it Woodside Louisiana. Paladin, receiving a final order from the Supreme Court of British Columbia approving its acquisition of fission uranium, but shares just a little weaker today.
APA was an outperformer today, up by 3.25%. The Australian Energy Regulator ruled in a preliminary decision that the company's South West Queensland Pipeline should not be subject to full price regulation.
Now, why was the stock of the day DroneShield?
Well, yesterday DroneShield announced another contract win in the United States, and Shaw Partners put out a note today. They've got a buy rating on the stock with a high risk rating and a $1.30, maybe $1.31 price target. I'm going from memory, but basically saying that they've got confidence now that they've got this other contract win, that they'll hit the mark in terms of earnings, and also just saying that the Middle East war, the Ukrainian war, really sort of a blueprint for how warfare is evolving, and that is in large part having to do with drones.
Well, on that point before we get to the stock, that was interesting with Mark Jokum from Global X ETF saying they just launched a defense ETF because there's so much demand in this space, as you would expect.
Yeah. So Michael Wayne joined me today from Medallion Financial and Kai Chen from MPC Markets. Here's a little snippet of what they had to say about DroneShield.
Actually out there selling their product at an increasing rate. So the order backlog is huge. The sales pipeline is also very large. It's just whether or not they can keep delivering whilst keeping a check on costs. Because there has been one criticism, it has been that their costs have come in more than expected. But the business itself continues to win new contracts, and that's always a good indication.
They have done a couple of cap raises. You know, the price of the stock went up to about $2.80, but then they raised capital for 120 million, and it went back down to $1.30. But I think all that has kind of played out, and you know, I'm still bullish on this stock. I think it's as said before, high risk stock. It's going to be volatile, but I think there is still growth potential in this stock.
So would you buy it today?
Yes.
That's a buy and a hold for the stock of the day, DroneShield. Surprise, here I am again. Also surprise, here's Mark Gardner from MPC Markets joining us in studio. Mark, hello.
How are you doing?
I'm very well, thank you. Markets got a little bit sick today. They felt a little bit disappointed by that China stimulus that didn't come to the fore.
The bazooka turned out to be a pea shooter. But it look, probably just a little bit carried away on both sides realistically. Whilst it's great headlines, for the press, I think it was the biggest drop in the Hang Seng in history, or Hang Seng tech sector in history, or something like that.
To be fair, that only goes back to 2016 or something.
No, I know, but it,
we love a headline.
Yeah, absolutely. But that was just a parabolic rally as well. So it was sort of coming back into line overall. They did commit to hitting their economic targets. They just weren't very specific about the stimulus. So I think the moves are more the market's problem rather than the economy's problem. And but I do think it's probably put a bit of a floor. Those sort of commodity stocks like lithium, iron ore, etc., were getting really oversold. I probably think it's put a medium-term floor in those for now, and then hopefully we just get a little bit of calming down. But volatility across the board, bond volatility's back to the highest level it's been since January. VIX is obviously back, in the 20s. So generally that means there's possibly something ahead that's going to rattle markets a little bit, and those bond yields back above 4%. I don't think I've ever seen a 50 basis point cut followed by bond yield, long end bond yields going straight back up again. So yeah, a lot of weird things happening in markets, I've got to say. It's not your normal correlation is not making a lot of sense.
Yeah, I'm just going to correct myself. The index was actually launched, the Hang Seng Tech Index, in July 2020, and I'm only putting that in context because in my previous job, when I used to get told tell everyone it's at a record low, I'm like, it's 1 year, it's 2 years. But yes, we do love a headline, as we like to say. Okay, so bond volatility, you're saying. US earnings are about to kick off as well. So the banks here are what we should be watching. Yeah,
so we've got JP Morgan Friday, Wells Fargo, BNY Mellon. So that'll give us a little bit of an indication there. And Delta and Domino. Pepsi was okay overnight, and we got just an absolute slew of Fed speakers this week. I think if you... Obviously, it's a KPI on the Fed board that you have to speak this week, because I think everyone's at least speaking just about once. So, and there's been some pretty confusing, one of the particular speakers, I think it was Bostic last night, was pretty, almost seemed a little bit regretful after that payrolls number, but I'm very much not trusting the numbers on the payrolls. There's been a lot of revisions, and it feels like the 50 was a little bit political leading into the election, given Donald Trump's made said in no uncertain terms that Jerome Powell's out the door if he gets back in. And then as well, obviously, government hiring's been through the roof. BLS, I definitely wasn't expecting a weak number that in that last payrolls, particularly leading into an election. So I dare say watch out for the revisions the first Friday of next month.
Yeah. All right, so the dollar really holding its ground ahead of the FOMC meeting minutes. I suppose with all of the Fed speakers, how much more can we learn, really?
I think it probably just adds to the confusion almost. It's been, the edges, the hawk and the dove edges are really sticking to their story, but the people in the board members in the middle are, I think they're showing a tiny bit of regret, but I don't mind the strategy at the moment. A higher terminal rate with the front end loaded cuts is something they haven't necessarily done before, but I think it's not a bad plan, to be brutally honest. And get it out of the way, get markets back to stability, obviously buffer. But you got Jamie Dimon coming out saying, that they're worried about inflation again and things like that. But I mean, JP Morgan are just perma bears anyway. So he's always calling the end of the world.
Yeah.
Has been forever, and I guess that's why they were probably the most conservative in during the GFC. But
It's so interesting as well, though. Forget about oil for now, but the hurricane activity in the US is just shocking, and that's going to really put some strain and potentially lead to some inflationary pressures as well.
absolutely, and is it Hurricane Milton? It's
Bearing
like
down on Florida, it's like a superstorm.
Yeah, it's it's once in 100 years, which we've heard a lot, but
Yeah.
I think this genuinely is like the worst storm and on the back of Helene as well. They've had a lot of ports closed.
Yeah.
Thankfully, that strike was sorted out on the west coast. But yeah, this is really serious. It's I heard a Florida Republican this morning just saying basically like get out or there is every chance you'll end up like you'll die basically, which were really alarmist words, but he was deadly serious. So yeah, it's a big thing. I mean, I guess on the upside, JLG probably gets back their catastrophe repairs and things like that. But
There's always a silver lining when you're an investor, isn't there?
I
Mark?
suppose so. I mean,
with
drug
all
companies in COVID, blah, blah, blah. Got to find a way.
Your thoughts on the RBNZ? Double whammy, double happy, one of the board members, I think, said.
Yeah, look, it was largely expected 50. So I think that is definitely one of those scenarios where you're not necessarily rejoicing 50 because I think the economy is in seriously dire straits. I heard just leading up,
Someone said cratering, yeah.
Yeah, and they were, maybe 75 was a good idea, but it's. I don't think it's going to have a massive effect overall, but yeah, hopefully that starts to stem the bleeding over there a little bit, and they can get back on track.
It was the finance minister, that said that.
Mark, it's funny because even though it's been a bit of a depressing conversation so far, if we're honest, I had Kai Chen, who you work with obviously at MPC Markets, on the call today, and I got to say, I'm trying to remember which companies, but he was putting buys on some of these companies. So you're still finding opportunities. It's just very stock specific. Is that it?
Yes, and we've also got, we've got not the benefit of having nice chunks tucked away in decent high yielding structured products as well means that we can still snipe from the sidelines, but we don't have to, we're not managing the rest of the portfolio, I suppose.
Well, he did mention Stockland, and he did mention a structured product
Yeah,
in relation to it. If you don't want to pick the winners,
Yeah.
but it was a buy for Stockland in his view.
Well, absolutely, yeah, and they've got land banks, and I mean that one's, that won't vary. There's not a lot of volatility in the valuations because they've got a bit large land bank as well. But clients are getting 10.1% on that, so it's a pretty It really does raise the bar. DroneShield's one we've liked for quite a while. I think it was stock of the day there, but a few people bought a bit of that. But and I think where that valuation is in that contract win the other day, and obviously what's going on in the Middle East, etc. And I think there'll be some fighting words at the BRICS conference on the 22nd of October as well. I can't see the bid disappearing too far from gold either. Because
I was about to say, because I spoke to Jonathan, also from MPC.
Yes.
He's still a gold bug. He was on the trade, and he's still liking a lot of the smaller players. I think Catalyst.
Yeah, he's very much across that.
Talk to Jonathan.
Yeah,
it's up online.
Pretty much.
ausbiz.com.au.
As I said last week, the joy of having an investment committee is if I'm not keen on gold, someone else
Kyle. He's loving gold and lithium.
Yeah, well, lithium, I think, like I said, it just needed to find that floor overall. And I think that the fact that the big boys have come in now and started trying to bottom pick and basically saying we cannot start these operations for what we're buying them for means that that's going to form a bit of a natural floor in the market there somewhere. Because if you can't operate and make a profit, you're just not going to operate. So that sort of glut of supply is going to start to disappear. But a pretty similar situation in iron ore 18 months to 2 years ago where there was that glut of supply, and as when the iron ore price cratered, it just wiped out a lot of the fringe competition. So the big boys are still like Fortescue produces for like $18 or something like that, and then they've got the cost savings coming up with the EV, shifting their machinery to EV as well. So that'll be further cost savings. So those really low cost producers will always survive, in my opinion, and. Yeah, but at the moment, I mean, commodities is such a noisy trade, as we've seen, and it's even noisier at the moment with all this movement, the speculation around China and stimulus. So, it'll... you've got to pick your points in the range, basically, and don't be making the mistake of buying at the top of the ranges in these things. You're better off just to. It's highly unlikely for these things to kick on much further. So you'll probably be waiting for below 40 again in BHP and probably around that 17 mark in Fortescue.
Which I think it got to at one point today.
Yeah, iron ore was off by 3%, Dalian iron ore, I should say, futures in China. And BHP ending the session down 1.7%, Fortescue 2.3%, Rio 2.1%.
Yeah,
so what a difference a day makes.
BHP's price action's been really resilient, to be honest. Fortescue not so much. But, it's been swinging much more wildly. But, yeah, BHP's been... it was only down a couple of percent yesterday, and whereas I think Fortescue was down like 6 or something like that. So it's actually fairly positive, I think, that BHP doesn't get hammered like the rest of them. Everyone seems to be pretty happy to sit there.
Yeah. All right, Mark. Thank you as always, Mark
you.
Gardner from MPC Markets. Yeah, we had a trio of MPC markets.
There you go. And if you've missed the trade, for example, you can catch up online, ausbiz.com.au. And we also put the trade up on YouTube if that's your bag, which I know it is for a lot of people. Okay, let's get across some of the leaders and laggards. And I love that we always start with the positive news. The leaders, we've got Webjet here, Jules, up by 6.8%. Zipco doing really well, up by 6.25% on no news as well. Pro Medicus, so it came out with that contract renewal, bigger, better, longer. And its share price is reflecting that, I'd say.
Indeed. All right, let's get to the laggards today. I think they were all around the energy and materials space. Star Entertainment there as well, down 6.3%, 26 cents. Speaking of our friends at MPC Markets, Liontown there at 79 cents. Jonathan told me that he sees anything, and this is of course not trading advice, but from Jonathan Tagadina, anything below $1 as a buy for Liontown.
Oh, okay. Well, 79 cents. There you go. Let's take a look at some of the small cap names. Echo IQ.
Yes. So that's really interesting. They've got FDA approval for this tool, which is helping to diagnose pulmonary cardiovascular disease. Then, of course, they want to commercialize it, take it to market, but it's done incredibly well over the past year. In fact, since it's listed, but today up 28% on that FDA approval. And GreenX Metals, Hutchison, Novonix, and Wicker also looking good.
Yeah, Novonix had a agreement with Chemicals Group to focus on sustainable cathode material feedstock. So a bit of news there. Now let's get to some of the laggards. And I dare say it would be energy and resources, and there it is. And Vinyl Group as well, off by 6.6%. Boy, that features a lot on either the best or worst performers these days.
I love saying the Tinder of the music industry.
You
knew that was coming. You knew that was coming. It's good to be cliche.
Yeah, well, they're cliches for a reason, right? Yeah. Okay, let's get to the FOMC meeting minutes tonight. Look, what else can be added to? Doesn't matter. We'll be reading them anyways. We'll likely be talking about them tomorrow, particularly when we hear from Bostic, Logan, Goolsbee, and Jefferson from the Fed.
All right, tomorrow we have got another speaker from the RBA. So we had Hauser this week, we had Kent today, Sarah Hunter tomorrow speaking on a panel, Melbourne Institute inflation expectations as well.
This is about as close to the US FOMC speaker route that we get, I would say. Let's get to a bit of a wrap of this local market. So the CBOE Australia Index, as we showed you earlier, really flatlined today. When we take a look at where the S&P ASX 200 finished, it was up by about 0.1%. And so, going into a pretty quiet European session right now with the ASX at 8,187. NASDAQ and S&P 500 E-minis are coming under a bit of pressure at this point at least, with still a lot of water to go under the bridge between now and the US Open. And big pressure coming through on Chinese mainland markets with the composite off by 4%, Juliet.
All right, so a flat finish for us, and that does it for this Wednesday.
Hard to believe. Hump day over. We'll see you tomorrow. We're live from 9:45.